Friday, the 5th of July. Welcome everyone to Business Morning. We're live to you from Channel's global headquarters here in Lagos. Let's bring you up to speed. Of course, you may have heard in the news over the last days, in perhaps about 2 weeks, that Airtel Nigeria's shares will be listed today on the Nigerian Stock Exchange. We're just getting information from the stock exchange that this will not take place as earlier reported in the media. The corporate communications unit of the stock exchange says what will take place today is the facts behind the listing of Airtel PLC. A cross-border listing was expected today. It's been widely reported. Now, the NSE says this will no longer take place, but the directors and top management of the company will brief the market today, this morning, starting about 11 o'clock, the stock exchange, but no formal listing of Airtel Nigeria's shares would take place today, the 5th of July. Yesterday, the new board of the Securities and Exchange Commission held its first meeting, what you call the inaugural meeting, where the chairman, Obafemi Lijadu, says, quote, "We aspire to have a capital market where the rules are enforced and where the public who invests are all protected." He went on to say in a press statement released yesterday afternoon that we need to reinforce the public trust. We need to have a more orderly market, a market that is fair and transparent. We need a market that is attractive to investors, both local and foreign. Meantime, the Chief Operating Officer of MTN Nigeria, Mazen Moreau, tells investors that collaboration, transparency, and discussion with regulators will help them navigate Nigeria's business environment. He says that for potential investors, they have to ensure that there is a clear and transparent process they are following. They have to be open and proactively engage various stakeholders. So that's where we have today. And of course, you've heard that the Airtel shares will no longer be floated on the stock exchange today, but what you call the facts behind the listing will be taking place. So let's get into one big story. Over the last 24 hours or so, the Central Bank of Nigeria issued a new directive to banks to lend more to the what you call the SMEs, the retail, the mortgage, and the consumer space. So this is what you call the bottom of the pyramid lending focus. The Central Bank Chief, Godwin Emefiele, spoke about that in his 32-paragraph address, which he read on June the 24th. Well, of course, it's been sounding this that the banks need to do more for the private sector, in particular, the ordinary businesses and ordinary Nigerians. Muda Yusuf is the Director General of the Lagos Chamber of Commerce and Industry and is here this morning in the studios here to talk to us about it, giving us what you called ground-level viewpoint of this particular new policy from the regulator. Mr. Yusuf, thank you so much. It's good to have you. At the last minute, we just had to call you in and give us up to speed. We'll spend the last few years talking more about how interest rate and credit markets in Nigeria speaks to the big boys, the Dangotes, the Forty Oil, the Nigerian breweries and Guinness, whatever. Now, this looks like a different direction that the central bank is taking.
Yes, this move is a very commendable move by the Central Bank of Nigeria. Before now, we have complained a lot about the challenges of financial intermediation in the Nigerian economy. Because the way the banking system can bring value to an economy is to ensure effective intermediation. And what that means is that the banking system should provide a platform where financial resources will move or will be mobilized from the surplus end of the economy to the deficit end of the economy. But what we have seen over the years is a situation of almost complete or substantial crowding out of the private sector as far as the credit market is concerned. And it is even worse for the SMEs and, and the like. So this development is good. It's going to improve financial intermediation. It's going to impact a lot more on the issues of job creation, financial inclusion, and all of that. Because we have seen over the years a situation where the bulk of the credit is going to government via treasury bills, via bonds. And we have seen a situation where we have a financial system, a banking system that have almost zero tolerance for risk. And there is no way you can grow an economy like ours with a financial system that will not want to take any risk at all. And because you have this kind of disposition to risk, you have a situation, you go to the bank, you want a facility, the bank will ask for collateral of almost 150% of the value of the facility. Or they ask you to go and provide a bank guarantee, which is as good as having the cash yourself. So all these have been creating very serious issues for financing the economy, financing business, and even when credits are given to the private sector. We have a situation where maybe 20% of the operators take 80% of the facility. In other words, I mean, you talk about the big boys and all of that. So these are the people that are taking a lot of the credit. Of course, they are bringing a lot of value to the economy. But the economy is much bigger than that. And if you really want to build an economy that is inclusive, I think this is the way to go. And the good thing about this is also the fact that the CBN is now compelling the banks to do what they should do, not doing their job for them. Because we have seen over time, because there are gaps in financing, the CBN jumps into the space, giving credit to this, supervising that. I think what is more enduring and what is more sustainable is to align the banking system itself to the needs of the economy, which is one purpose that this will serve. And the good thing about this new development is also the fact that we are now looking at even retail, SMEs. We are having
and mortgage.
Yeah, mortgage. We are having a broader view of the economy. Because one of the issues that I've also had with the CBN over time is this obsession for risk sector. It's either manufacturing or agriculture. Fine. These are very critical sectors. But we're in an economy where over 50% of our GDP is in services.
And that's where you have the informal economy.
You have informal economy,
large extent, yes.
You have the transporters, you have those who are logistics, you have the maritime people, you have the construction, you have the real estate, you have so many people. We even have investors in the social sector, like education and health. So it is also good to mainstream all of these people.
For example, if you have a small private school,
yes,
for example,
exactly,
and you need just perhaps 500,000 to just maintain the building, for example, or just repaint it, or just provide a new gate or whatever, and you don't need much, perhaps $1 million, perhaps just 2 million naira.
Exactly.
So
these things are important because we have to realize that a lot of segments in this economy are bringing value to the economy. To the extent that anybody is creating value, whether you are in manufacturing, whether you are in agriculture, whether you are an Okada rider, whether you are a transporter, whether you are in maritime, whether you are in property, whether you are in construction, IT, and so entertainment, and even broadcasting. You are bringing a lot of value in terms of tax revenue, in terms of employment generation, in terms of even helping to eradicate poverty.
So the whole idea of increasing tax and bringing more people into the tax box, yes, when you're not giving them credit.
Of course, you have to build the economy first.
Because I'm going to ask you, on what basis do you want me to pay tax if I don't have credit, a very good measure of credit and at a reasonable rate?
Of course. You have to grow the economy. And this is one very effective way to grow the economy. And to get the banks to also do what they should do, to get them to be more creative about linking up with entrepreneurs in this economy. You cannot be running in this economy, operating in this economy. You make so much money and you don't want to take any risk.
Making money from treasury bills,
yeah,
and sitting on 90-day treasury bills and taking 14, 18%. Foreign exchange market
and all of that. That is not supporting growth. It's not supporting development. So we need to get the banking system to support entrepreneurs, because entrepreneurs are risk takers. And it is the risk takers that actually move the economy
forward. So with this, the bank should have more people, or well, as much as more people who are bringing in deposits on one hand, as well as those who are creating credit officials on the other hand.
Of course.
So not just being a very cheerful taker, but a reluctant giver.
Exactly. If they are reluctant, at least the CBN is now
saying you have to do it.
You have to do it.
By whatever means, and says, grow this to 60%, whatever your portfolio, increase it to 60%.
Minimum.
And yes, minimum threshold, and as a penalty if you don't comply.
Minimum, because if you look at even other claims, the African average loan to deposit ratio is about 78%. The global average is about 100%. Most of the advanced economies like EU and the rest, they have close to 120%. So we are so far behind. And all the while, you know, because of all these issues, well, of course, they complain about issues of credit risk, which also we have to address, because we need to also put a lot of things together to make this policy work. So
that we don't run into a very higher non-performing loan.
Exactly. We need to address the issue of credit risk.
You think the new collateral registry, the credit bureau,
exactly, all those things
that the federal government put in place is a way of supporting this moving forward?
Yes. The collateral registry will help to reduce
and the credit bureau. Know your customer.
Yes, we should have even more effective credit guarantee scheme. We should have that in place. And we should also get the fiscal authorities to create the enabling environment.
I was about to ask you the question, where do we have the fiscal authority for ease of business credit?
They are
not just ease of doing business, but ease of business credit.
Of course, because if the environment is too difficult for you to operate.
Which is electricity. And of course the roads, number two.
Logistics, the ports, you have the Apapa example that is there. We have even the regulatory environment. You have policy issues. You have institutional issues. All these things pose very significant risk to investors.
So while the central bank is doing this on one hand, the fiscal authorities need to do something also very quickly.
They need to do something very quickly to create the environment to reduce credit risk.
Because if I have the risk, if I have the credit from the banks, yet I'm using it to buy petrol and diesel into the generator to run a fish, what do you call it, cold room, as it's called. That's not going to be sustainable.
Of course, it's not going to. I mean,
because I'm just borrowing to.
You need to buy diesel, to buy I mean, and you have situations where you set up a factory, and in parallel you are almost setting up a power station.
Next to it,
for your factory to be able to function. These are not sustainable things. So just as you say, you cannot clap with one hand. The monetary authorities and the fiscal authorities have to work together. And it's also important that the CBN also realizes this, because the CBN cannot provide the roads. The CBN will not provide power. The CBN will not clear their Apapa gridlock. You know? These are very critical issues that will also create the environment for this kind of policy.
So even though we're expanding this credit window and we want to reduce interest rates, it all boils down to structural issues.
It boils down to structural issues.
That we need to clear very quickly as well.
It's very important, but we cannot wait for that to happen because there is no perfect time for some of these things. What the CBN is doing is to fix some of the challenges in the financial system, particularly obstacles and obstructions to proper and constructive intermediation. Getting the banking system to interface properly with entrepreneurs, getting the banking system to also be more creative, and shorting all these very easy windows of making money, or reducing the windows, not shorting them.
Let's get the banks to give back a little.
They have to give back. And they have to expose themselves a bit to the risk.
Some risks.
Yes, that we were encountering in the business environment. You cannot sit in the comfort zone and say somebody should go and bring bank guarantee. You should go and bring 150% collateral of the value of facility. Then you are not part of this economy. So it is important that these things should happen.
It's important.
It is very important, yeah.
Thank you so much. It's a Friday. We got to let you go early.
Thank you.
The first Friday in the new month.
Thank you very much.
Muda Yusuf, the Director General at the Lagos Chamber of Commerce and Industry, put in some perspectives and insight into the new central bank directive to banks to raise their loan-to-deposit ratio to 60% no later than the 30th of September, and as the hefty penalty if you fail to do so.